All right, why don't we start with your word of the day? It's smorgasbord. What are you seeing out there?
Hey, listen, I could barely sleep last night. There's something for everyone this week. It's the biggest week of earnings, and we've got everything across the board from an economic perspective. You've got growth data, you've got inflation data, you've got jobs reports. And by the way, Frank, we also have a Fed meeting today with a very exciting, potentially post-game presser. So big week, smorgasbord for everybody.
That's a lot more than a by the way, Kevin. When you're saying it could potentially be exciting, what excitement do you see potentially happening, and then how does that impact the markets?
You know, unfortunately, I don't think it's going to. It's probably the biggest event, but it's something that we're probably all kind of teed up to expect a kick the can. You know, spoiler alert, we're probably not going to get a rate cut today, but the post-game presser and sort of the landscape and the runway for rate cuts is what we're all looking forward to. And I think the market's pricing in a September rate cut and potentially a second cut later in the year, but you could easily derail that. If you've got a hawkish tone in the press conference, I think that could be a precursor for a market that's going to be very ill prepared for that. So we've baked in a lot of it. We've seen the market really rally into earnings and into this Fed meeting and all of the other economic data that we've got this week. But I don't expect that we can rally on it. I think the only thing we could see is maybe a negative reaction.
Okay, we're actually just talking about that. Out of some of the most recent Fed chairs, Jay Powell has the worst rate decision performance when it comes to the market out of all of them. Markets are basically flat on the day, and there's often late day selling. So do you see a similar setup? But beyond equities, what are their implications if you mentioned it, a hawkish Jay Powell, for the bond market and also for the currency market? We're seeing the dollar begin to rally a bit, and bond yields actually move to the downside. Are there implications for those two parts of the market as well?
Yeah, I tend to look a little bit further out than a one-day response, but to your point, it's very valid. What the bond market's looking for is making sure that the Fed's not going to come in here and just start cutting rates willy-nilly, and that has not been the case. I mean, that's not the reputation of Chairman Powell, but what they want to hear is a reinforcement that, look, we're in the position that we're ready to cut rates, and we want to see that in the economic data. Core PCE could trend us in that direction. You know, we talk all the time that that's the Fed's preferred measure of inflation, and it should be because of the way they sort of alter the impact on housing and healthcare. But so far, things have been coming down. The labor market, the jobs report Friday will also weigh heavily on that. But I do think that so far, when you look at the 10-year, you look at the dollar, everybody's kind of cool right now. And the expectation is that inflation isn't going to revamp, respike, come back because of these tariffs. And as long as that maintains the reality and the data, then we should be in good shape. Markets can grind higher.
I want to get to your pick. It's IBM. So we just showed it. That was our mystery chart. It's declined after earnings. Why is this a good entry point for IBM?
I think the assumption is that a lot of your viewers already have exposure to the Mag 7. You know, we're expecting good numbers out of them. We need it. But a little sleeper stock IBM, although it's had a great year after maybe a 4 or 5 year stall, they had excellent numbers. The stock's off 10% for the past month. If we're in an environment that interest rates are going to come down and you want to look at dividends, dividend growers, aristocrats, you know, perpetual compounders, I think IBM's a way to play tech and a little bit more conservative tilt. And the numbers were really good. I mean, they had literally almost $17 billion in revenue. They beat expectations on earnings at $2.80. They've got Red Hat, they've got Watson X, they've got the exposure in quantum computing and AI that you might be looking for. Consulting was the one weak spot there, but I think that was to be expected. So if you don't already own it and you're looking for another little bit more of a conservative way to play the tech theme, I think IBM's a portfolio stalwart that you can certainly take a look at.
Kevin, we got to make this quick, but as part of the earnings report, they have really talked about M&A and a looser regulatory environment, especially on the back of the reports that Palo Alto might be looking to acquire CyberArk. Do you see IBM as an acquirer of a company, and would that be a good thing? They reported $1.5 billion in Gen AI bookings. Do you think they're looking to build that out?
I mean, I would love it if they do. I don't know that they need to go into the cybersecurity. I like the Palo Alto acquisition that was rumored yesterday, maybe even more than rumored at this point. The last time that IBM made that huge acquisition of Red Hat was a little bit of a square peg into a round hole. And as luck would have it, it's working out to be an amazingly synergistic part of the company. So if the right acquisition comes along, I think it would be a fantastic opportunity for IBM, but I think they want to make sure that they're careful and that they don't slip up and accidentally fall into a great acquisition like they did with Red Hat.